and welcome to Weekly Economic Insights, your weekly dose of events and news that you need to know to manage your personal finances. I am Ridhima Bhatnagar. Let's begin with all the stock market action in news from the Indian markets. It was a week of mixed performance for the Indian stock market as both the Nifty and the Sensex saw marginal dips but had a good close on Friday. Now let's talk about the big deal that has been inked. It has finally happened. After months of speculation, Reliance, Viacom 18 and Disney on Wednesday announced the signing of binding definitive agreements to form a joint venture that will combine the businesses of Viacom 18 and Star India. The board of RIL has approved a primary investment of Rs 11,500 crore in SIPL, Star India Private Limited, to acquire 16.34% of the paid-up equity share capital of SIPL. Now, the transaction values the joint venture at Rs 70,352 crores on a post-money basis, excluding the synergies. Now, as part of this transaction, the media undertaking of Viacom 18 will be merged into Star India Private Limited or SIPL through a court-approved scheme of arrangement. So the big question is, how will the new entity look like? The new entity will be controlled by RIL, owned 16.34% by RIL, 46.82% by Viacom 18 and 36.84% by Disney. The joint venture will also be granted exclusive rights to distribute Disney films and productions in India with a license to more than 30,000 Disney content assets. The entity will have 750 million viewers across television and digital platforms through JioCinema and Hotstar. The merger is subject to regulatory, shareholder and other customary approvals, is expected to be completed in the last quarter of calendar year 2024 or the first quarter of calendar year 2025. Now let's talk about the other big story. India's GDP growth accelerated to 8.4% in the third quarter of FY24, beating expectations. This was according to the data that was released by the Statistics Ministry. Commenting on the GDP data, the Prime Minister said the GDP growth figure for the third quarter of the current fiscal displayed the strength and potential of the Indian economy. Now, there are some changes as far as the Nifty Next 50 index is concerned. The Nifty Next 50 index represents 50 companies from the Nifty 100 after excluding the Nifty 50 companies. This index captures about 10% of the free float market capitalization of the stocks listed on the NSE as on September 29, 2023. Now, out of the 5 companies joining Nifty Next 50, 3 are PSUs, which are Power Finance Corporation Limited, REC Limited and Indian Railway Finance Corporation Limited. The other 2 companies getting included are Adani Power Limited and Jio Financial Services Limited. Staying with the same space, Shriram Finance Limited will also now replace UPL Limited from Nifty 50 and the Nifty 100 indices. This will be from the 20th of March this year. This change follows UPL's exclusion from the Nifty 100 index, leading to its removal from the Nifty 50 index as well. Now let's talk about some other key data. The NSSO has released data on household consumption expenditure. The household consumption expenditure survey was conducted from August 2022 to July 2023. This is useful for understanding the consumption and expenditure patterns, standard of living and well-being of households. This is what it shows. It says the average MPCE at current prices or the monthly per capita consumer expenditure in rural areas is Rs 3,773, up 163.83% from Rs 1,413 in 2011-12, whereas in urban areas it is Rs 6,459, up 145.55% from Rs 2,630 in 2011-12. The bottom 5% of India's rural population has an average MPCE of Rs 1,373, while it is rupees 2001 for the same category of population in the urban areas. The top 5% of India's rural and urban population, ranked by MPCE, has an average MPCE of rupees 10,501 and rupees 20,824 respectively. Now, moving on. The Reserve Bank of India has released the House Price Index, or the HPI, for Q3 of 2023-24. Now, the House Price Index for Quarter 3 of 23-24 is based on transaction-level data received from the registration authorities in 10 major cities: Ahmedabad, Bengaluru, Chennai, Delhi, Jaipur, Kanpur, Kochi, Kolkata, Lucknow, and Mumbai. This is what some of the key highlights throw up. In Q3 of 2023-24, the All India HPI grew by 3.8% a year-on-year basis, up from 3.5% growth in the previous quarter and 2.8% growth a year earlier. Chennai recorded the highest growth rate at 8.4% and Kochi the lowest at 0.6%. Now, let's talk about something that is extremely interesting for me and you. Indian companies are expected to give an average salary hike of 9.3%. Well, according to MoSPI's Total Remuneration Survey, there is a positive average salary outlook, and India has the highest forecasted salary increase of 9.30% in 2024. MoSPI's findings highlight that the transportation equipment, banking, financial services projected increase of 5.5% and 5.4% salary respectively. This was followed by chemicals, life sciences, and technology sectors with similar expected increase of 5.3%. Now, time for some global news. The Financial Action Task Force, or the FATF, has announced the removal of the United Arab Emirates, or the UAE, from its grey list of jurisdictions under increased monitoring. Now, when a jurisdiction is placed on FATF's increased monitoring list, it means they're actively addressing strategic deficiencies in their anti-money laundering, terrorist financing, and other financing regimes. This list is commonly known as the Grey List. Now that UAE has been removed from the Grey List, India could see potential inflows from the UAE. Next, SEBI has cautioned investors against fraudulent trading platforms for accessing via FPI route. Now, the SEBI has identified fraudulent practices where the fraudsters attract victims through online trading courses, seminars, mentorship programs in the stock market, leveraging social media platforms, either WhatsApp, Telegram, or even some live broadcasts. Well, with this, we've reached the end of this video. Do not forget to like and share this video. One Finance will bring you every week the top news and updates that impact your personal finances. Do follow One Finance.